Step 1 of IFRS 15's 5-step model is the identification of a contract with the customer. IFRS 15, paragraph 9, stipulates attributes of a contract that must all be present in order for there to be contracts in terms of IFRS 15. If all of these attributes are not met, then a contract is deemed to not exist and IFRS 15 cannot be applied. The entity must then continuously assess to see if all the attributes of a contract are met. The attributes require that all parties to the contract approve it. The rights to goods or services transferred can be identified, and payment for those goods or services can also be identified. The contract has commercial substance, and there is a probable flow of economic benefits that will flow to the entity for the provision of goods or services. For example, assume that Ma Baker is in the business of providing small loans. Her business is called Loan Shark. Ma Baker's son, Lloyd, is looking to join the family business and borrowed $1,000 from Loan Shark Limited to buy a new gun. Lloyd told his mother that he will repay the $1,000 with butterfly kisses and an IOU note. In terms of IFRS 15, does a contract exist? In order for there to be a contract, all attributes set out in IFRS 15, paragraph 9 must be satisfied. There has to be an agreement between Ma Baker on behalf of Loan Shark Limited and Lloyd. Both parties agree to the loan of $1,000. However, it is arguable whether or not there is truly an obligation on Lloyd to repay that loan with any interest. The rights to the $1,000 loan can be clearly identified when it was transferred from Ma Baker to Lloyd. However, the payment terms for this loan cannot be clearly identified. Lloyd simply gives butterfly kisses and a note which does not stipulate a repayment date. Further, the agreement does not have any commercial substance, since the IOU note is not likely to be repaid by Lloyd. Even if Lloyd repays the money, it is unlikely that he will repay it with any interest, and so the amount of future cash flows related to this agreement is not likely to be affected. This agreement also fails the last attribute, since it is not likely that Lloyd would ever repay his mother's business, and so the consideration is not probable. Therefore, a contract does not exist, and accordingly, IFRS 15 would not apply. To recap, there are 5 attributes or criteria that must be met for a contract to exist in terms of IFRS 15.